Hello, I'm Gloria Ledoux, bringing you the Compliance Outlook for a review of the first and second quarter of 2016 at the CU Compliance Connection by InfoSite. We're back and here to keep you informed on compliance issues your credit union has worked on and continues to work on in 2016. Effective in the first quarter of 2016, the NCUA adopted regulatory changes related to flood insurance that we will discuss. From the CFPB, we had the routine annual threshold changes tied to the indices and two changes in regulation that impacted the small creditor, including the determination of the small creditor status, rural and underserved definitions, and balloon payment qualified mortgages. These small creditor changes are definitely positive for credit unions, so make sure to take another look at these options if your credit union didn't qualify in the past. For the second quarter of this year, we had significant change that becomes effective as part of the NCUA's amendments to the member business lending regulation that impact the personal guarantee waiver requirement. Additionally, if you remember last April, the CFPB suspended the requirement to upload credit card agreements for a year. Well, that year has passed, and now the requirements for credit unions to submit their credit card agreements to the CFPB is effective for this April. As of January 1st, credit unions were required to comply with some changes related to flood insurance. Credit unions are required to escrow flood insurance premiums or fees. Additionally, credit unions that have current properties with flood insurance are required to reach out to those borrowers by June 30th of this year, offering them the ability to escrow their flood insurance premiums. There's model language for this communication that credit unions can use to obtain a safe harbor within the regulation. With this regulatory change also came an exemption from obtaining flood insurance for a structure that is part of the residential property but is detached from the primary residence and doesn't serve as the primary residence. Lastly, to wrap up the summary of the flood changes, the credit union should make sure their notice of special flood hazard, which is the notice that is sent out to the borrower when a lender determines that the property securing the loan is or will be located in a standard flood hazard area, now contains the new language as amended in the model form. The Home Ownership and Equity Protection Act, or HOEPA, governs high-cost mortgage requirements. If the credit union is originating a mortgage that is considered high cost, they will have to provide specific disclosures, will have restrictions on transaction terms, fees and practices, have specific ability to repay requirements, and must require home ownership counseling. As with many of the CFPB's regulations, certain thresholds adjust each year in accordance with the Consumer Price Index for all urban consumers. For HOEPA, the CFPB adjusted the points and fees thresholds to determine if a loan is considered a high-cost mortgage. So loans with points and fees exceeding these thresholds will be considered high cost and subject to the additional restrictions. If you haven't already, credit unions should make sure that all their systems have been updated to reflect all of these changes. For a loan to be considered a qualified mortgage, the loan's points and fees must not exceed certain thresholds. These thresholds were also increased at the beginning of the year. The loan amount is the amount financed minus points and fees that are rolled into the loan. Credit unions should again make sure that their systems and applicable policies and procedures are updated to reflect these changes if they haven't already. Credit unions must maintain and establish escrow accounts for first lien, high-priced mortgage loans for at least 5 years. Remember, this does not apply to subordinate liens or HELOCs. However, if you have a fixed home equity in first position, the escrow requirements will apply if the loan is considered to be a high-priced mortgage loan. The CFPB made adjustments as a result of the Consumer Price Index. Therefore, to qualify for the small creditor exemption, the credit union has to meet the criteria in the slides and have assets of less than $2.052 billion, which was decreased from 2015. Credit unions should also be aware of the changes made to the safe harbor penalty fees for credit cards. Although the fee for the first late payment didn't change, the threshold was reduced from $38 to $37 for the subsequent violations. This quarter, we have two changes from the CFPB that impact small creditors. The first has to do with the credit union's determination if they are a small creditor. Effective in January, the CFPB made changes to increase the threshold to determine small creditor status to credit unions that extended no more than 2,000 covered loans as opposed to the previous 500, and the credit union does not have to include those loans that they maintain in portfolio. That could be huge for some credit unions, so make sure that if your credit union didn't previously qualify for the small creditor exemption, that you're taking another look. As a reminder, credit unions that qualify for the small creditor exemption are eligible for the small creditor qualified mortgage, which does not have the debt-to-income ratio limitation of 43%. Additionally, if you were a small creditor prior to the changes recently made by the CFPB to be eligible for the balloon payment qualified mortgage option, the credit union had to originate 50% of their covered loans in rural or underserved areas. However, on March 22nd, the CFPB amended the regulation, which is Regulation Z, to allow a credit union to qualify as a small creditor for the balloon payment qualified mortgage if they originated one covered transaction on a property located in a rural or underserved area in the previous calendar year. This change, issued on March 22nd, was effective on March 31st. Talk about a quick turnaround time. Now, for the second quarter of this year, last April, the CFPB suspended the requirement for credit unions to post their credit card agreements on their website for a year so that the CFPB could improve their website and the database that contains those agreements. Well, believe it or not, it's already been a year. And now credit unions are required to, again, post their agreements at the end of April. Under Regulation Z, a card issuer must submit their credit card agreements to the CFPB on a quarterly basis unless they qualify for an exemption. Therefore, the next submission deadline is no later than the first business day on or after April 30th. The NCUA recently finalized their regulation impacting member business lending. Most of the changes they made are not effective until January 1st of 2017. However, there is a portion of the rule that becomes effective on May 13th of this year, and that is the elimination of the personal guarantee waiver requirement. After May 13th, if the credit union chooses not to require a personal guarantee, they have to document the loan file with the mitigating factors that offset the risk of not requiring that guarantee. Thank you for joining me at the CU Compliance Connection, and stay tuned for future broadcasts on issues that affect your credit union. We are here to help you at the CU Compliance Connection by InfoSite.